It's not unusual for people to come up to you periodically and say, hey, can you help me out with my return? And you oftentimes, because you don't want to charge them, because maybe they're your friend or somebody, it's like, well, what are you dealing with? And he goes, oh, I'm really having trouble with depreciation on my rental property. You know, someone says I can't write the stuff off and I have to capitalize it. And you say, look, there's a publication that you can read. It's pretty straightforward. Why don't you take a look at it? If you have any questions, you know, I can help you out with it. And then comes the question is, have you actually assisted them in preparing their return? Are you going to be considered a tax preparer for the purposes of possibly assessing a penalty against you? It's hard to draw a line. Drawing upon past experience when people say, hey, I want to thank you for doing the return, and as a result of that, and I know you didn't charge me or anything because you're my brother, but I'd like to give you tickets to the Celtics game or something like that. And you say, gee, have I been compensated? So these dilemmas come up all the time in terms of when somebody is considered to be a tax preparer. And the issue isn't about what do we recognize as income, that's not the question. The question is, if you're a tax preparer, then you may be assessed penalties for the purposes of giving bad advice upon taking a position on a return or whatever, sometimes unwittingly. So this area that we're looking at is trying to identify who is a tax preparer and who is not a tax preparer, and what are some of the penalties that we can be assessed with as a preparer. Some of the rules come out directly out of Circular 230. Some of the things come out of code sections, and there's been some changes over the last couple of years, changes which I think are good ones to sort of take a look at. I'm going to give you some examples that have come out of some IRS notices which may be helpful in us beginning to understand some of these issues. But let's first talk about who is a preparer. Now you'll notice that I'm not saying who can practice before the IRS. That's different. And in fact, if you recall, who is a preparer is that preparing a return is not practiced before the IRS. So I'm sort of segueing out a little bit, because if you prepare somebody's return, if you're considered to be a preparer, you also are going to be allowed, as we see in the next chapter, the ability to have some representation of that client before the IRS's exam division. And so that there's some certain benefits to get in this area as well. But basically, a preparer is someone who, for compensation, prepares any return of tax or any claim for a refund. So that kind of gives you a general idea, is that if you hold yourself out to be a tax preparer and people pay you to prepare their tax return or to prepare an amended return, claim for refund, typically an amended return, then you're considered to be an income tax preparer or a tax preparer. Over time, what has happened is that this has morphed in a little bit more, because you could also have your own practice and you could employ people. Those people that you employ, that you direct, even though they're working for you, okay, are they income tax preparers? The definition goes something like this, is that if you employ one or more people who prepare tax returns, you're considered to be the income tax preparer of those returns as well, as opposed to the employee of yours who is not considered to be the income tax preparer. So there's definitions in terms of what's going out. So I hire somebody, a student, to work for me to prepare tax returns. Basically, I am considered to be the income tax preparer of those returns. But I don't necessarily have to complete the return. I don't even have to do the return. I could be an income tax preparer if I provide sufficient information or a substantial portion of somebody's income tax return. For example, if somebody comes to me and says, I have rental property, I also have a W-2. I don't know how to fill out that Schedule E that you do every year. Here's my data. Would you prepare my Schedule E? Will you prepare my depreciation? Will you go through and do that for me, and then I'll complete my return? And the rental activity added to the $10,000 W-2 represents a substantial part or sufficient part of the return that is needed to go in, and therefore you are considered to be an income tax preparer. as opposed to maybe giving a little bit of guidance on how a certain transaction could be recorded by maybe referring them to something in the IRS's publications or maybe on a form. This is how you do that computation, but you're not doing it. So there's a balance that we have in there in terms of who becomes an income tax preparer. Now, again, recognizing it from the services standpoint, if there's going to be a deficiency and there's going to be a penalty, they would love you to be the income tax preparer. That way, they can penalize you as well if you're involved in those things. So that's kind of the direction that we're kind of looking in here. So we're looking for compensation and a return. Now, who is not a preparer? If you prepare an information return, you are generally not considered to be an income tax preparer. An information return might be, say, a W-2 or a Form 1099. Now, you are considered to be an income tax preparer if you knowingly make that W-2 or the 1099 wrong. And that is that, boy, this person earned $50,000 last year. Let's say his 1099 is only $1,000. No one will ever know. Well, if you prepared that erroneously, then you can be considered to be an income tax preparer because that amount, when it goes on someone's return, is probably going to be a significant component of that return. So while information returns are generally not included, they can be. Employment taxes, if you're filling out a 941 or a 940, those were not in the past considered to be considered to be a tax return. They are now swept into it, as are gift and estate tax returns. The word used to be an income, and I'm saying it periodically, is that the penalties are imposed upon income tax preparers, and the operative word there is income. Now they've stricken the word under the preparer penalties, they've stricken the word income from there, and they've just replaced it with tax preparers. So they broaden the definition. I'm going to show you what that list looks like at this point. So that's one thing that we've seen change. That changed within the last 2 years. Tax planning. If the tax planning becomes a component, an integral component of the return that goes in, then you may be considered to be an income tax preparer as well. I probably will have asterisk. But if you only render clerical services, key punching, things like that, a lot of people were concerned that if somebody drops off a tax return, somebody reviews it, and they're the income tax preparer, and then give it to somebody who then enters it into the computer, such as an electronic return or ERO originator. If that person is now the preparer, they could be subject to penalties. So there needs to be clarification in terms of the actual tests that they go through and do, the actual steps they go through and do. So those people who provide simply the clerical exercise have been excluded from these penalty provisions. This has been an overall grab in terms of what it is that the service is trying to recognize. What we do know is that, or if it's also, if it's an insubstantial portion of the return. They've struggled with the term insubstantial portion. Should that be unsubstantial portion? Insubstantial. A small portion is what we're looking for. And in doing that, I think I got this right out of their website. In looking at that, they didn't define what that should be, but some of the terms that they've been throwing out is less than $2,000 could be small. Less than 20% of the gross income could also be small. So they're trying to put some parameters on those figures. So just to let you know that just because you do a piece of it doesn't mean that it is going to necessarily pull you into the return preparation if it's just a small component of the return. If you don't receive compensation, you're not considered to be a preparer. Okay? So if you are a volunteer, I'm going to say volunteer in a second, but if you don't get compensated for it, you're not considered to be a preparer. If you're an employee of an employer, okay, which is what an employee has to be, you are not considered to be a preparer. If you're a fiduciary for a trust, you're not considered to be a preparer. Or if you're a volunteer, especially if you're involved with a college's volunteer income assistance, the VITA program, the volunteer income tax assistance program, that group there, you're a volunteer, you can't be assessed a preparer penalty, which is, I think, pretty good. Now, what I wanted to do is I want to talk a little bit about what's involved in this preparing aspect in terms of returns. I got a couple things I want to show you. The first one deals with the exhibit of returns that in the IRS's notice that they sent out in terms of trying to identify, this is notice for the record, 2008-13, they provided a list of tax returns reporting a tax liability. And they include your typical Form 1040 or 1040A and easy, you know, the easy stuff there, a fiduciary return, corporate returns, those are fine. But they also added into it the estate returns. Now, an estate return isn't income taxes. It's basically a tax based upon the value of somebody's estate. So if you prepare that, you could also be deemed to be a tax preparer. They also added employment taxes, such as the Form 940, which is your unemployment tax, the Form 941, which basically represents the federal withholding tax and the matching Social Security tax. They also include some excise taxes, you know, the quarterly federal excise tax return, that's usually with diesel fuel and things like that, weird stuff. But they added those returns, the Form 990, which is basically a not-for-profit return, the highway heavy use tax is another one, benefit plans taxes, and then some other ones that I've never seen before. But then they go into Exhibit 2. And Exhibit 2 says, and I think this is an important phrase, is that information returns that report information that is or may be reported by another taxpayer that may be subject to an income tax, the tax return preparer, Section 6694 penalty, and that's the penalty area we're dealing with, if the information reported constitute a substantial portion of another return. So while in general, when you get for example, a K-1 from an individual, that K-1 that comes from a Form 1065 or possibly the 1120S, if that information, and I just sort of digress for a second, is that if I'm preparing somebody's tax return, they make $100,000 and they have a K-1, and included on the K-1 is say, $3,000 of interest income, let's say, from the K-1. That piece that pulls over there is probably not going to be considered a substantial portion of that return. It just simply isn't. So therefore, that person that prepared the K-1, that might be in a completely another state, or maybe in a foreign country for that matter, is not considered to be a tax return preparer for the purposes of assessing penalties on this return that I'm currently doing. Okay, so it doesn't extend there. Now, if the K-1, if the person made $100,000 and $99,000 of the $100,000 came from that source, then you can basically track back to the preparer of that K-1, and if that became the issue that then flowed through my client's return that then got disallowed, it was wrong, or whatever that might be, then that person that prepared the K-1, prepared the partnership return, could be considered to be a preparer for the purposes of assessing the return preparer penalties. Okay, I hope that piece makes sense. Then you get to Exhibit 3, which is the third, that's why they call it Exhibit 3, forms that would not be subject to a tax return preparer, penalty I should say, to the section penalty unless prepared willfully in any manner to understate the tax liability on the return or claim for refund. So I gave you the illustration earlier of a 1099. If you prepare that in a way to understate the tax liability, or W-2s for example, or even the actual Form 990. The other one was a 990 private foundation. But if you're doing these effectively willfully, that's going to create a bit of a problem. And there's a few others that get included. But what they've done is they've broadened the scope of the returns that are now included in the area that are now subject to it, where it used to be, if I prepare an income tax return, I can be subject to these preparer penalties. They broadened the scope of it. They've also broadened the position of what gets included in terms of trying to expand the scope of people that are included in it as well, not just the returns, but what piece did you have, and is that sufficient enough to say you are now an income tax preparer because of, or tax preparer because of the amount of work that you did in coming up with that position, or coming up with that amount that goes on the return, regardless of whether you filed that return or not, whether you were the actual one who signed it. So they're trying to grab more people into the pool to assess more penalties. Part of the reason that they're doing this is the fact that a number of returns that have gone in are simply fraudulent returns, and fraudulent in terms of the things that they've claimed or not claimed or omitted, and they're trying to go back to the people to say, you had a part of that return and we're going to assess this penalty for you.